Welcome to the Deep Dive. Today we're taking a close look at Constellation Energy's second quarter results for 2025.
Hmm.
Our mission really is to cut through the corporate jargon in their latest 10Q and news releases.
Yeah, get past the spin.
Exactly, and truly understand what's driving their performance, how they're making these big strategic bets, and, well, what it all means for the energy sector going forward.
And what's fascinating here, I think, is that this deep dive, it isn't just about the numbers for one company.
Right.
It really shows how a major player is, well, actively shaping this evolving landscape of power generation and supply, navigating these complex shifts in demand, policy, market dynamics.
So for you, the listener, it's kind of a shortcut.
Exactly. A shortcut to understanding the strategic playbook of a utility giant in a really changing world.
Yeah. And we'll be uncovering some critical insights, things like, a massive acquisition that could really redefine their
Oh,
footprint.
yeah, the Calpine deal.
Yeah.
And innovative, like decades-long power agreements, and even the sort of intricate dance between federal and state legislation that's solidifying their long-term vision.
It's a complex picture.
It really is. So let's jump straight in.
All right.
Let's start with a snapshot of their recent performance. What's the headline from Constellation Energy's second quarter of 2025? What's the immediate takeaway for us?
Well, the headline is pretty strong, actually, especially on the earnings front. Constellation reported a GAAP net income of $2.67 per share for Q2 2025,
Okay.
which is, a solid increase from $2.58 back in Q2 2024.
And the adjusted number?
Right. And on an adjusted operating earnings expenses, which, a lot of analysts focus on, they hit $1.91 per share. That's up quite a bit from $1.68 the previous year.
So beyond just seeing those numbers tick up, what were the specific drivers? What really propelled Constellation's Q2 results? What mechanisms were at play there?
Well, there were several favorable tailwinds, as they say. They saw higher revenues from Illinois' Zero Emission Credit Program, the ZEC program.
Yeah, the ZECs. Yeah, specifically from banks credits. They also benefited quite a bit from favorable market and portfolio conditions.
Meaning?
Well, that included higher capacity revenues, which is basically payment for having power plants ready to go, even if they aren't always running.
Got it.
And something they call generation to load optimization, which is, essentially getting smarter at matching their power output exactly with real-time demand.
More efficient.
Exactly.
Yeah.
And finally, their nuclear decommissioning trust, the NDT fund, those investments perform well too, so that added to the positive picture.
That sounds like, well, a lot of positives. Were there any factors working against them? Anything acting as a counterbalance, even partially offsetting these gains?
Yes, there were definitely some partial offsets. They experienced lower nuclear production tax credit revenues, PTC revenues, in 2025.
What was that?
This was largely due to higher anticipated gross receipts for the year overall.
Yeah.
That impacts how much of the credit they can actually claim.
Oh.
They also saw lower net unrealized gains from their economic hedges, those financial instruments they use to manage risk and lock in prices.
Right, the hedging. So connecting this to the bigger picture then, the performance over the first 6 months of 2025 actually shows an unfavorable variance compared to last year.
It's true.
What caused that shift over the slightly longer horizon, especially given that strong Q2 you just described?
Yeah, the shift for the 6 months ending June 30th, 2025 was primarily driven by, well, a few key factors. Unfavorable net unrealized losses on those same economic hedges we just mentioned.
Okay.
Significantly lower nuclear PTC revenues compared to the first half of 2024.
Big drop there.
Yeah, and higher net unrealized losses on their equity investments. But it's important to note, even over the 6 months, they still saw strong positive offsets.
Like what?
Favorable net ZEC revenues, and that includes a significant amount recognized from prior planning years in Illinois, interestingly.
Catching up on past credits.
Kinda, yeah.
Yeah.
And continued favorable market conditions, from higher capacity revenues, better realized margins on load contracts, and that ongoing generation to load optimization we talked about.
Okay.
Plus, strong NDT fund investment activity continued over the 6 months too.
Now, this is where it really gets strategic, I think. Constellation announced some truly massive moves, signals about their future direction. Let's start with the proposed acquisition of Calpine. What's the deal there, and why is this such a game changer?
Oh, this is indeed a transformative move. Huge.
Yeah.
On January 10th, 2025, Constellation agreed to acquire all outstanding equity interests of Calpine Corporation.
Hank Halfine is.
Calpine is a massive independent power producer. We're talking over 27 gigawatts of generation capacity.
Wow.
Yeah, notably including natural gas, geothermal, battery storage, and solar assets. A really diverse mix compared to Constellation's traditional base.
And there's more to it, right?
Absolutely. Critically, Calpine also brings a competitive retail electric supplier platform, serving about 60 terawatt hours of load annually. That's significant.
So how's the deal structured? It must be enormous.
It is. It involves 50 million newly issued shares of Constellation common stock, $4.5 billion in cash, and the assumption of roughly $12.7 billion of Calpine's outstanding debt.
Okay, that is a major strategic pivot. What's the core thinking here? Constellation, mainly known for its nuclear fleet, integrating all these diverse assets.
Well, the strategic rationale seems pretty clear. It's about increased scale and market diversification,
Right.
definitely.
Right.
But also, I think, a really pragmatic approach to the energy transition. By combining Constellation's carbon-free nuclear generation with Calpine's reliable, dispatchable natural gas, geothermal storage assets.
They get both sides of the coin.
Exactly. They're signaling that the future grid needs both constant clean power and flexible on-demand sources. They want to create the nation's leading competitive retail electric supplier, offering a much broader portfolio to customers.
Given the sheer scale of that acquisition, what about regulatory hurdles? Where do things stand with approvals? That must be complex.
They've actually made significant headway. Key regulatory approvals have already been received from the Public Utility Commission of Texas and the New York Public Service Commission that was back in June 2025.
Okay.
And from the Federal Energy Regulatory Commission, FERC, in July 2025.
So mostly clear then.
Mostly. The transaction is still conditioned upon review by the Department of Justice, the DOJ, and other, customary closing conditions. But it's expected to close in Q4 2025.
Okay, so potentially quite soon. Now, beyond the Calpine deal, there's also this really fascinating 20-year deal with Meta.
Ah, yes, the PPA.
What makes this power purchase agreement so special, and how does it play into Constellation's longer-term strategy?
Yeah, this is a really significant long-term agreement, a power purchase agreement, or PPA, with Meta Platforms, Inc., for the full output of Constellation's Clinton Clean Energy Center.
The whole plant's output.
The whole plant's output. It's special because, well, first, it supports Meta's ambitious clean energy goals, starting in June 2027. But it's absolutely crucial for Constellation, too.
How so?
This PPA supports the relicensing and continued operations of the Clinton nuclear facility for another 2 whole decades, specifically after the state's ZEC program is set to expire. That's huge for that plant's future.
So it provides long-term certainty beyond state subsidies.
Precisely. Plus, they'll expand Clinton's clean energy output by 30 megawatts through plant uprates, expected by 2029.
Uprates meaning getting more power out of the existing reactor.
Exactly. And these uprates are also expected to qualify for that technology-neutral clean electricity PTC, the 45Y tax credit from the Inflation Reduction Act.
Which was preserved by recent legislation.
That's right, preserved by the One Big Beautiful Bill Act, or OBBBA.
And it's not just new deals, they're also bringing old assets back online. Tell us about the Crane Clean Energy Center. That used to be 3 Mile Island Unit 1, right?
That's right. The Crane Clean Energy Center will return to service in 2027, which is actually ahead of their original schedule.
Why the accelerate?
It was selected by PJM, that's the regional grid operator for expedited grid connection. It's part of their reliability resource initiative.
So the grid needs the power.
Desperately.
Well,
Just highlights how critical new sources of clean but also firm and reliable energy are for the grid. And Constellation is moving pretty quickly to meet that demand.
let's shift to policy then. You mentioned the One Big Beautiful Bill Act earlier, OBBA. What's in it for Constellation and the nuclear industry more broadly? This sounds like a major piece of legislation.
It really is. The OBBA, signed into law in July 2025, provides significant long-term certainty, particularly for Constellation's nuclear assets.
How does it do that?
Well, among its provisions, it permanently extends key elements of the 2017 Tax Cuts and Jobs Act. Things like full bonus depreciation.
Remind us what that means practically.
Sure. Full bonus depreciation basically means if Constellation buys a big piece of new equipment for a power plant, they can write off the entire cost on their taxes immediately, right away, instead of spreading it out over many years.
So it incentivizes big investments.
Hugely. Big capital investments, modernizations, things like that. It also allows immediate deduction of research and development expenses. And maybe more directly relevant here, The OBBBA also preserves the transferability and federal tax credits from the Inflation Reduction Act.
Ah, the IRA credits. Which ones specifically?
Specifically, the 45U credit for existing nuclear plants, that runs through 2032, and the 45Y credit for new nuclear projects, think uprates, restarts, new reactors, that goes through 2035.
So securing those credits is vital.
Absolutely. It also enhances the credit slightly, allowing advanced nuclear facilities to potentially qualify for an energy community's bonus adder, though there are eligibility rules.
Okay.
But the bottom line is the OBBA strongly reinforces the long-term economic viability of Constellation's nuclear generation assets. And it's worth noting, it had overwhelming bipartisan support.
Interesting. Now, you mentioned state-sponsored ZECs and federal PTCs earlier. This raises a kind of nuanced point. How do these state programs interact with the federal tax credits? Is there a risk of double accounting or clawbacks?
Yeah, that's a really critical interaction. Many state-sponsored programs like ZECs and carbon mitigation credits, CMCs, effectively require Constellation to refund or pass through the federal nuclear PTC they receive.
So they can't get paid twice for the same thing?
Pretty much. Think of it as avoiding double dipping for the same clean energy output. If the federal government gives a tax credit for nuclear generation, the state programs often reduce their subsidy by that same amount, or close to it.
Can you give an example of how that plays out in the numbers?
Sure. So in Q2 2025, an estimated nuclear PTC benefit of about $45 million was included in their operating revenues.
Okay.
That's significantly lower than the $408 million in Q2 2024.
Wow. Big difference.
Big difference.
Yeah.
But, on the other hand, a pre-tax benefit to net operating revenue of roughly $75 million was recognized in Q2 2025 from those state-sponsored programs. And that was up from $51 million in Q2 2024.
So shifts between federal and state support.
Exactly. And just to add more complexity, the Illinois ZEC program also led to a substantial $201 million of revenue recognized in Q2 2025 for ZECs delivered in prior planning years.
Ah, that backlog again.
Right, with the actual payment expected in Q3 2026. It's also worth noting the New Jersey ZEC program ended in May 2025.
Okay.
And the average CMC price in Illinois was actually negative $0.42 per megawatt hour for Q2 2025. A huge swing from a positive $10.10 in Q2 2024.
Wow, negative prices. Okay, that's complex. This raises another important question, especially given current events. With global tensions, particularly around Russia and Ukraine, how does Constellation manage its nuclear fuel supply, especially with past reliance on Russian imports?
Yeah, this is obviously a critical area of focus for the entire industry. The U.S. Prohibiting Russian Uranium Imports Act became effective back in August 2024.
Right.
Banning low-enriched uranium imports from Russia, though there are possibilities for waivers under certain conditions.
And Russia's response.
Well, in response, the Russian government issued a decree in November 2024 imposing temporary restrictions on enriched uranium exports to the U.S., but, notably, still allowing special licenses for individual shipments. So, not a total cutoff, it seems.
So how does Constellation navigate this? What's their mitigation strategy?
Their strategy appears pretty robust. They state they procure nuclear fuel predominantly through long-term contracts with a diverse set of suppliers, both domestic and international.
Diversification is key.
Absolutely. They've also actively increased their nuclear fuel inventory, building up stockpiles to manage longer-term security and, cost of supply.
Makes sense.
They state they comply with all U.S. and international trade laws and work closely with the U.S. government to maintain supply continuity. And on top of that, it's worth remembering the Department of Energy is distributing billions of dollars right now to support expanding the domestic nuclear fuel cycle.
Right, trying to build up U.S. capacity.
Which should further enhance long-term supply stability for companies like Constellation.
Okay. Beyond fuel, what about broader environmental regulations? How is Constellation navigating what seems like a constantly shifting landscape? Rules like the Clean Air Act regulations, the Good Neighbor rule. This seems like a very dynamic area.
Oh, it's exceptionally fluid.
Yeah.
And complex. Regarding regulating greenhouse gases from power plants, the EPA issued a final rule in April 2024.
Right.
Regulating emissions from existing coal, new natural gas-fired plants, and existing oil gas steam generators under Clean Air Act Section 111.
But that didn't last long.
Well, things changed quickly. In June 2025, the EPA proposed to repeal its GHG regulations for the sector. And then in July 2025, they proposed to repeal the 2009 endangerment finding,
Which is the basis for...
which is the fundamental legal basis for all GHG regulation by the EPA. So huge potential changes there.
Wow. Okay. What about the good neighbor rule?
Right, the good neighbor rule.
Okay.
The EPA's plan from June 2023 established nitrogen oxides emissions budgets for fossil fuel plants in 23 states.
Mm.
And EPA had disapproved state implementation plans for 21 states back in February 2023. However,
More legal challenges.
exactly. The Supreme Court stayed the EPA's rule in June 2024 for the duration of the ongoing litigation. Following that, the EPA issued an administrative stay in November 2024 and now actually intends to approve state plans.
So a complete turnaround there, too.
It seems like it. Constellation's stated approach through all this is simply to comply with all regulations as they are finalized and, continue focusing on their significant portfolio of carbon-free energy production.
Just navigate the changes as they come. Okay, let's shift focus a bit to Constellation's financial health itself. How are they managing capital, and what does their liquidity picture tell us about their ability to actually fund these huge strategic initiatives like Calpine?
Well, they're actively demonstrating commitment to their capital allocation promises. For instance, they repurchased about $400 million of common stock through an accelerated share repurchase agreement, an ASR, just in Q2 2025.
Returning cash to shareholders.
Exactly. And this is part of a larger share repurchase program, up to $3 billion authorized since 2023. They still had about $540 million of that authority remaining as of June 30th.
So confidence in their stock price.
It signals that, yes, they're also committed to increasing dividends by 10% in 2025.
Okay. And liquidity. How much cash and credit do they have access to?
In terms of liquidity and capital resources, they fund their needs through, well, the usual channels. Internally generated cash flows, public debt offerings, commercial paper markets, and diversified credit facilities.
It's standard stuff.
Pretty standard, yeah. But the scale is significant. They maintain considerable financial flexibility, with access to $9.5 billion in aggregate bank commitments as of June 30, 2025.
That's a lot of firepower.
It is. They also hold strong investment-grade credit ratings, BBB plus from S&P and Bay1 from Moody's. That's important for borrowing costs.
And they have buffers. What if ratings slip?
They've addressed that. The company stated that even in a sort of worst-case scenario of a 3-notch downgrade below investment grade, which is a big drop that would trigger about $2.4 billion in incremental collateral requirements for derivatives.
Okay.
But they state they have sufficient liquidity to cover even that. And their cash position looks strong. Cash, restricted cash, and cash equivalents at the end of Q2 2025 totaled over $2 billion. $2.062 billion, actually.
And how does that compare?
That's a significant jump from just $383 million in Q2 2024. So, yeah, they've built up a pretty robust war chest for future strategic moves.
And sticking with financial health, let's touch on something critical for any nuclear operator. Their nuclear decommissioning trust funds, the NDTs, how are those performing? Are they adequately funded for the long term? That's always a big question mark.
Yeah, it's crucial. And their NDT funds seem to be performing well. They total $18,329 million as of June 30, 2025.
Which is up from
$17,321 million at the end of December 2024. So growing nicely.
And does the regulator agree they're sufficient?
According to the Nuclear Regulatory Commission's latest biennial report, which was filed in March 2025, yes, it confirmed that all units, with the one exception of Peach Bottom Unit 1, demonstrated adequate decommissioning funding assurance. That was based on the trust fund values as of the end of 2024.
And what about Peach Bottom Unit 1?
For Peach Bottom Unit 1, the financial assurance is actually provided by PECO customers. So it's covered just through a different mechanism. Overall, comprehensive coverage seems to be in place.
Okay. So we've covered a lot today, from Constellation's, pretty impressive Q2 performance and that game-changing Calpine acquisition, to the long-term Meta PPA, the re-energizing of older assets like Crane, and how they navigate these really complex federal policies and global supply chain challenges. It's really been a deep dive into their strategic playbook.
Indeed. It's very clear that Constellation Energy is navigating a highly dynamic landscape.
Yeah.
You see them balancing these significant growth initiatives like Calpine and the Meta deal with all these external factors like evolving tax credits and global supply chain issues. Their moves show a clear commitment, I think, to leveraging both established clean energy sources, mainly nuclear, and these newly acquired diversified assets to meet future demand.
Ultimately, this deep dive really shows how a major energy producer is strategically positioning itself,
Hmm.
trying to meet that increasing demand for reliable, carbon-free energy while also adapting constantly to evolving regulatory environments and ensuring robust financial stability for, well, decades to come.
Right. So if we connect this back to the bigger picture for you, the listener, maybe consider this. With the ever-growing demand for electricity driven by trends like AI, electric vehicles, industrial growth, Constellation is clearly making huge bets on nuclear power's continuing, even expanding role.
Uh-huh.
What does this deep dive tell us about the future of energy more broadly? And thinking beyond Constellation, what critical new technologies or perhaps partnerships might emerge in the next few years to further accelerate the clean energy transition? Maybe even beyond what we've discussed today. Something to think about.